The Reserve Bank of Australia's latest move has left many Aussie homeowners scratching their heads. Despite rising pressure on borrowers, the RBA held rates steady in July, but signalled that relief may still be on the way. And with talk of an August rate cut now swirling, confusion is growing over what this really means for property prices and mortgage stress. For more, I'm joined here at the desk by Terry Ryder from Hotspotting and, of course, the host of the Property Playbook here on Ticket. Great to see you, sir. There was a lot of confusion about this because so many people had expected that there would be an interest rate cut. Has the media got it wrong?
They certainly have, but fed by our chattering economists who collectively got it wrong. I think over 90% of them said it was a stone cold certainty that we're going to have an interest rate cut in July, and something very different happened. Personally, I can do without all the speculation. I don't think it really helps anybody, the daily speculation about what's going to happen with interest rates. I just want to know what's going to happen.
It's become a national sport, right? Everyone is talking about will they go up, will they go down? But the media's role in this has been interesting about how they've pulled it apart for what this means for home prices.
Absolutely nothing at all, in fact, but that's what, they overanalyse and they overrate the impact of interest rates on what's happening with real estate markets. There are other forces out there far more powerful than interest rate trends, but economists collectively seem to believe that it's the big thing, that it's the one thing, the only thing that drives outcomes in real estate. They've got that absolutely wrong. They only have to look at the recent past. Look at what happened in 2023. They all predicted that property prices would fall across Australia in 2023 because interest rates were rising. They didn't, they rose, and many parts of Australia had boom level growth. Start of 2024, same thing. They forecast that property prices would fall a lot, 10 or 15%, many of the big bank economists said, because interest rates were high. And again, we had the opposite. We had growth across the board last year, 5 or 6% as an average across Australia, but again, many markets in some of our capital cities and our regional markets had boom level growth. So I think it's time for them to let go of the simplistic kindergarten theory that rising interest rates mean prices will fall everywhere and falling interest rates mean that prices are going to rise. It just doesn't work like that.
What has changed? So if we think about these economists, as you mentioned, for the big banks, they were all pretty much certain that this was going to be a sure thing, that there would be a rate cut. How did they get it wrong? And when you say that they need to upgrade their thinking from the kind of preschool idea of how markets work, when did it change? When did they become wrong about it?
I think they've always been wrong, because as long as I've been doing this, bank economists and others like them have had this simplistic theory that rising interest rates mean prices fall, falling interest rates mean prices rise. As I say, it just doesn't work like that. There are other bigger forces. How do they explain the regional differences? How do they explain that in 2024 we had a 4-speed market across Australia? We've all got the same level of interest rates, the same trend with interest rates happening everywhere in Australia, but we had markets that were booming, markets that had moderate growth, markets that were stagnating, and some markets like Melbourne where prices fell. The interest rate theory doesn't explain those regional differences. What does explain it is that real estate is local. It's all about local economies. What's happening, whether the economy is strong, diverse, creating jobs, is there infrastructure spend happening? That's what dictates what happens with real estate markets, far more powerful than this overreaching, but in my view, rather irrelevant thing about the trends with interest rates.
Well, what do you think will happen next? So obviously the RBA is where everybody looks. What do you think their next decision should or could be when they meet next?
Well, I think that they were just being overly cautious. They're a little bit nervous about cutting too much too soon, and we've already had 2 reductions in 2025. So I think the fact that they didn't give us that cut in July makes it a little bit more likely that they're going to give us one in August. I think we're always likely to get at least 3 this year.
Why were they nervous? What was the reason that you think that they held back? Because if you look at the state of the economy, aside from housing, a lot of businesses are doing it really tough. Why do you think that they held their nerve?
Look, honestly, I think they're out of touch with their constituents. They're more interested in what the data says. They're looking at graphs on this.
Which is interesting, because this government has made changes to the RBA board to try to avoid that very thing, bringing in more people that they believe have real-world experience.
Yeah, but But they're all, my viewpoint is they're all financial elites. They're all people who are used to earning $1 million a year or more. They're not feeling the pain of their decisions, and they don't understand what it's like at street level. They're in their ivory tower offices, whereas people at street level are feeling the pain of their decisions.
Well, you can see it when you walk around cities these days, the number of businesses that are closed, the for lease signs in a lot of places as well. Is that something we're seeing right across the country? You talk about the four-speed economy.
Yeah.
Are we seeing the slowdown in business right across the economy, do you think?
Well, it depends on where in Australia. There are economies that are absolutely thriving, like Perth and Western Australia, Adelaide and South Australia, Brisbane and Queensland. And it's not a coincidence that those are the markets that have been really pumping strongly in terms of price rises. So those economies are doing well, and there's less likely to see businesses struggling.
You deal with a lot of people in the real estate industry. Just finally, how do they feel about the RBA? What's the overriding feeling within the industry about these decisions?
Look, I think, like me, that at the ground level, they're understanding that markets don't care what the bank economists say. They have their own dynamics, and they're responding to supply and demand issues which are driven by what's happening in local economies. That's why we have so many regional differences. That's why we have some markets booming and others going backwards. That's what people who are real estate professionals at the coalface are feeling. And I think they, like me, could do with a lot less speculation and chatter about interest rates and just focus on what really matters.
Terry Ryder from Hotspotting, always appreciate your insights here on Ticker. Thank you.
You're welcome.